Hi all, welcome to the session of second part of Final Accounts of Sole Traders. This is Mary Nefla, Assistant Professor in the Department of Logistics Management, St. Albert's College, Autonomous, Ernakulam. In the previous session, we discussed about the Final Accounts of Sole Traders, focusing on the trading account. And in this session, we are discussing about the profit and loss account, that is the second part of income statement. A profit and loss account is an account prepared to ascertain the net profit or loss made during an accounting period. And the specimen of profit and loss account will be the same as that of a trading account. So this is the format of a profit and loss account. It will have four columns. The first column will be particulars and the second column will be the amount column. And the left hand side of the profit and loss account is known as the debit side, and the right hand side of the profit and loss account is known as the credit side. And the debit side will be included the items such as gross loss brought down. The first item will be the gross loss brought down, if any, because if the trading account has a gross loss, that should be brought down to the profit and loss account. And if it has a credit balance, that is gross profit, that should be transferred to the credit side of profit and loss account. The second items will be the indirect expenses. All these items comes under the indirect expenses. For example, salaries. The salaries paid to the managers or the salaries paid to the executives, all these are the indirect expenses. And the indirect expenses are the expenses which are not directly relating to the manufacturing of a product. So the salaries, then carriage outwards, interest paid, discount paid, postage and telegrams, all these are the items come under the indirect expenses. Then we can go to the credit side of the profit and loss account. The first item is discount received. All the indirect incomes such as discount received, interest received, rent received, etc. will be shown on the credit side of profit and loss account. After entering the indirect expenses and the indirect incomes, we can compute the grand total of both the sides, the debit side as well as the credit side. And after computing the total, the highest total should be entered on both the sides. After entering the highest total, take the difference between the two sides. And if the difference is in the credit side, that should be net loss. And the difference in the debit side, that shows it is a net profit. This is the specimen of profit and loss account. Next, we move on to a problem. Prepare the profit and loss account of Mr. John from the following information. We have certain information such as gross profit, carriage outwards, salaries, interest received, discount received, postage and telegrams, etc. So first of all, we have to draw the profit and loss account of Mr. John. This is the format, and the first item should be the carriage outwards, because we have a gross profit. So the gross profit is shown on the credit side. That's why we are starting with the debit side item, carriage outwards. The carriage outwards amount to 4,000. This is an indirect expense. That's why we are debiting this item. Next item is salaries. Salaries is also come under the indirect expenses. 5,000 is the amount. Next item is insurance. If we are paying the insurance premium monthly or annually, that should be debited in the profit and loss account as an expense. Next item is discount allowed. If we are selling a product, we will provide some discount to the customers. That is known as discount allowed. It is an indirect expense. The amount is 200. Next item is bad debts. Bad debts means the irrecoverable portion of debtors. That is an expense of the company. That's why we are showing it in the debit side of P&L account. Next item is depreciation. Depreciation is the wear and tear happened to a fixed assets due to the passage of time or due to obsolescence. That is an indirect expense that should be shown in the debit side of profit and loss account. It amounts to 2,000 rupees. Next item is postage and telegrams. If we are giving a letter to a customer, all these expenses come under the postage and telegrams expenses. That amounts to 600 rupees. So we completed the debit side. All the indirect expenses that have given in the question have written the debit side. Then we move on to the credit side. As we mentioned earlier, gross profit is the first item to be credited in the P&L account and it amounts to 9,000 rupees. The next item will be interest received. If we are receiving interest on a fixed deposit, that is our indirect income, not relating to the cost of product, not relating to the production. So that's why we are showing this in the credit side. Amounts to 1,000. Next item is discount received. If we are purchasing an item, we may receive discount from the supplier. That is discount received. That should be credited in the profit and loss account and it amounts to 300. So these are the items shown in the profit and loss account. After entering all the items, we have to total both the sides. We can say that the credit hand side or the credit side total will be 10,300 and the debit side total will be 15,600. So the debit side total is the highest. That should be entered in both the sides, in the debit side as well as in the credit side. So we have entered the highest total of rupees 15,600 in both the sides. After that, we have to take the difference, that is the highest total minus the lowest total. 15,600 minus 10,300, that amounts to 5,300. That will be the net loss. It should be credited in the P&L account. By net loss 5,300. After entering this amount, it should be transferred to the balance sheet under the heading capital. Okay, this is the solution to the problem. So, the same net profit can be calculated by using an equation. The equation will be net profit is equal to gross profit plus indirect incomes minus indirect expenses. We can see how the same problem can be solved using the equation. This is the problem. So, first we have to write the equation. Net profit is equal to gross profit plus indirect incomes minus indirect expenses. We know that the gross profit amounts to rupees 9,000. Then we have to find out the indirect incomes. The indirect incomes will be the interest received plus discount received. That amounts to 1,000 plus 300, 1,300 rupees. So we got the amount of indirect incomes. Next we have to find out the indirect expenses. For that, we have to add these items together. Carriage outwards, salaries, insurance, discount allowed, bad debts, depreciation and postage and telegrams. While we are adding these items, we will get the indirect expenses. After adding these items, we will get 15,600 as the indirect expenses total. Then we can substitute it in the equation, that is net profit is equal to gross profit plus indirect incomes minus indirect expenses. 9,000 plus indirect incomes 1,300 minus 15,600. So we can see that this is a negative balance. It shows that this is not a net profit. We will get a net loss of rupees 5,300. I hope you all understand the session. Thank you.